Hey everybody, this is Gary Yao. I'm here with my friend Frank. Frank, how are you?
I'm doing well, Gary. How are you?
I'm great. So let's get started. This is a question I want to ask you an what if scenario. Now, we
Okay.
know that the Federal Reserve is going to drop interest rate. They already mentioned that. They already announced it. Actually, they did announce it that they drop back in September. Well, we didn't see
Yep.
anything change. Interest rate are still at 7.5, 7.25, 6.25, 6.5. Now, what would happen to the real estate market if they say, for example, they drop because they say, oh, inflation is controlled. Now we want to stimulate the economy. What will happen if mortgage rates drops to 3%? This would be interesting. What do you think?
Okay. What would happen if rates dropped to three, mortgage rates dropped to 3%?
Yeah,
Um, well, my first thought is, that would be, you know, that would be ideal. I mean, think about it. Well, it's a two-part answer, and I'll try to keep it brief.
I would like to hear
Two-part
about
an
it.
Okay, two-part answers. One, the market will have a just a super strong buyer's market.
Mm-hmm.
Because think about it, when the one, I think it might be like the one and only time that we had rates at 3% was during COVID.
Yeah, and you saw what
Um,
happened.
yeah, yeah, yeah. I saw what happened. Like we saw what happened. We thought the world was coming to an end for real estate, and it did for about 2 months, and then month three, it just like, whoa, what is going on?
Yeah, I remember that in COVID was officially announced in March, and I have like a couple of escrows, and they get canceled. It didn't move forward because we didn't know what was going on, and the escrows didn't close. And for the next 2 months, nothing happened. The market was isolated, it was desert, the streets were empty. So and then interest rate were announced to be dropped to 3%, and even saw 2.5, 2.2%, and property skyrocketed. You saw that.
Right,
So what do you
yeah,
think?
yeah. So, okay, so number one, all those buyers that were pre-approved at 3% would jump back in.
Yeah.
A lot of a lot of buyers that probably have decided, I'm out. I missed my opportunity at 3%. So I'm out. All of those buyers would likely come back in. Other interesting scenario would be that we've had a real, just it's a real tightening of inventory in the last several years, and it also has to do with those 3% rates,
Hmm.
where sellers are thinking, well, yeah, I'd like to sell, but if I sell, I give up my 3% interest rate,
Yeah.
and I'm going to replace it with a 7% interest rate, or or even further back, if we go even further back, close to 8% interest rate.
Yeah.
Um, so you'd have a lot of both very motivated buyers and sellers, I think, if rates drop down to 3%. So that's the first part of that's part one of my answer.
Okay.
What do you think?
Let me respond to that because I'm curious about your parts, your second part. But if I understand correctly, you're saying that it will be beneficial for the economy to have a 3% rate because
Yeah.
it will.
Well, it'll. I was going to say beneficial for real estate, but anything that benefits real estate benefits the economy. So
Yeah.
yeah, go on.
Okay, let's say specific. It's going to be beneficial for real estate because it's going to have more buyers jump in,
Right.
and the sellers, well, they'll be motivated to sell because to free up the inventory, and then they're going to be able to sell and move on, I guess, to buy a second house, right? I think that's the idea. I will say I don't agree. I strongly disagree, and here's why.
Okay. Okay. Tell
Um,
me what.
let's say, for example, if a seller sells his property and they have the golden handcuff, right? That's what they call it because they have 3%. They're comfortable. They are not looking to sell the 3% interest mortgage to buy one at 6.5. It just doesn't make sense, right?
Right.
So they're not. There's no inventory. But think about this way: if a seller, let's say, for example, I sell my house, right? I have a family. I sell my house, whatever, 3%. I'm gonna buy now for 3%, another one for 3%. Now, did I really free up inventory? Because it's a net negative. If a net zero, meaning that I have a house and I
Uh,
go for another house. Really, I
okay.
didn't free up any unless I sell that I don't buy. I I still have to take somebody else's house. So I'm just trading one to another. It's
Right.
right.
Zero sum game.
Yeah, zero sum game. So for the
Yeah.
buyer who's a renter who's jumping to the market, there's still no inventory. Like, where's it coming from? It's not coming from the sellers because the sellers still need a place to move into. And if you tell me, like, well, they could buy for new builds, well, new builds are waiting to see what's happening. And think about this, new builds right now, they're not building houses because they are borrowing money to build it. And with a high environment interest rates, they're not going to borrow money because they don't know what's going to happen. And people with buyers not jumping in. Again, they're in a deadlock. They're waiting to see who flinch. If there's no buyers in the market, the builders are going to build anything, and if there's buy jumping in, the builders are going to buy, they are going to build, but it's going to take, I don't know, 2 years to build something, only to be, oh, my camera is, but only to uh be lagging the market. If I'm not mistaken, we're actually behind, or we're lacking about 5 million properties. So that's my take. Like, low interest environment is not helpful for the economy. In fact, it's going to heat it up even more, and then price is going to skyrocket because more buyers are going to jump in and they're going to bid it up because they're not looking at the price of the property, they're looking at the mortgage payment. And then thinking, well, if everybody's in a frenzy, buying frenzy, the excitement is going to go up, FOMO is going to kick in, fear of missing out. And, it's going to hurt. That's what we saw on the pandemic. In that short period of time, in 2 years, we saw houses increase 40%.
Right. Yeah.
So I don't think a high interest rate environment is going to be good for anybody, because with that scenario, once houses go up that high, you might think it's going to go down eventually. No, because then you're going to create more golden handcuff for new buyers, and the existing
And,
buyers, they're spoiled. They are used to pay 3%. They're not going to sell unless there's another 3%, right? So if they sell, they're going to replace it. Really, nothing is going to help. That would not help the economy. In fact, I will argue that having a high interest rate is what's keeping us from going to hyperinflation. That's my
okay.
thesis.
Okay. So so yeah, yes on the higher interest rates are keeping inflation in check. Um I I want to talk more specific about our market, Southern California market.
California. Okay.
Yeah,
Yes.
yeah, because you're taking a very, a national view of things. You know, I'm here's where I disagree with you.
Okay.
You've got sellers that are, if rates drop down 3%, you've got sellers that will finally be willing to sell and give up that 3% because they can get a 3% wherever they move to. And yeah, if they're competing against first-time buyers here in the area, or other buyers here in the area, then it's zero-sum gain. You're basically not you're not loosening up the market by putting more homes on the market. But here's where I think what we need to factor in. A lot of buyers are moving out of state. You've got a lot of buyers who are, especially people that have owned their house for a long time, are buying down. So they're looking for smaller homes. They are looking for newer construction homes. And there is, at least here in where we're located, you could find a smaller one-story home, which seems to be the preference for, uh, somebody
Elderly
who's
retirees.
scaling. Yeah, that and you just have to be willing to move east. And there's plenty of new construction east from here. So you've got that, and then you've got the other buyers that are moving out of state. Excuse me, sellers. and
Okay.
you know that we've got a lot, we're losing a lot of sellers to move out of state for a number of reasons. Um, so if they're moving out of state, then they are freeing up that house. They're not buying another house here and competing against other buyers here. So you've got that pool of sellers that are going to be that are going to be buying somewhere else and freeing up property here. So I think that we have to factor that in. And if we do, then there would be more houses on the market and less competition. And it could keep prices stable.
I so want to answer, but our time is up. We're like at 10 minute at the 10 minute mark. Should I answer it? Should I
Yeah, go.
rebuttal?
Well, yes,
Okay.
yes, but keep it brief, obviously.
Okay, yes, I don't want to have the last word, Frank, but I guess I
No,
will.
no, today you're going to.
Okay, so yes, we hear a lot of saying the news media communications are saying that we have the mass exodus in California. There are people moving out of states, moving to the East Coast. The two most popular states that people, the elderly are moving to are Florida and Texas. One is because they have no income tax, and the other is because they have good elderly care. So Florida. Now, let's look at this scenario. What is the percent? What is the number of retirees versus the number of young professionals, new grads, and new couples starting their life? I would like to say that we have way more young professionals that are starting their careers than they are retirees. Like, how long does it take for someone to retire? Working 40 hours, not 4 hours, 40 years before retiring. That will be the baby booming generation. Now, every year we have a ton of graduates, not only for Southern California, but throughout the United States that are looking for that head start. And where can you get a head start? Move to big cities. In fact, the vast majority of the population live in big cities. Do you know that Southern California is actually not Southern California, the entire of California is the mecca for brain drain, meaning that we have tracked the best of the best on business, technology, and research than any other area in the US. Not the US, in the world. We are who we are, and we are so great as an economy, as a nation, because we attract the best. And when you have the best, you have the best economy and the well, I guess the best quality of life for each. I dare to say I will have to look at the numbers on that, but we have more professionals moving here than are leaving, and the ones that are leaving are being replaced 10 to 1. I will say on that. So we have no shortage of people here in California or Southern California. We actually, in fact, need more people to leave so that we have a new crop of new professionals that can have their own house here. So I even have like anecdotally, yeah, I have friends who actually left for another states, and they came back. Me myself, I've been in so many different states, and I tried to leave so many times, as with so many of the people I know, and they end up coming back.
Well, Gary, let's do this. Let's do that research
Yes.
between now and next week, and
Uh-huh.
let's see if if your thesis is accurate and that there is such a big difference between number of new buyers versus sellers moving out of state. I'm very curious to see that.
Me too.
Um, so okay, so with that, let's leave that for next week.
Okay, Frank, I will talk to you next week then.
Talk to you then.
Mhm, bye.